Chapter number 9, ICAI questions. Test your understanding. Question number 1. A company asks you to carry out a process of confirmation of its accounts receivables having balances in excess of 10 lakhs as per its books of accounts at the close of the year. The work to be performed only involves preparing and sending confirmation requests to such parties, analysis of variations on receipt of the confirmations, and submission of a report in accordance with the professional standards. What points have to be kept in mind in the inclusion in the report, specifically for such engagement? The described engagement is an agreed upon procedures engagement. Following points have to be kept in mind for being included in the report. A statement that the procedures performed were those agreed upon with the recipient, a statement that the engagement was performed in accordance with the standard on related services applicable to agreed upon procedures engagements, identification of the purpose for which the agreed upon procedures were performed, a listing of the specific procedures performed, a description of the auditor's factual findings, including sufficient details of errors and exceptions found, a statement that the procedures performed do not constitute either an audit or a review, and as such, no assurance is expressed, a statement that had the auditor performed additional procedures, an audit or a review, other matters might have come to light that would have been reported, a statement that the report is restricted to those parties that have agreed to the procedures to be performed, a statement that the report relates only to the elements, accounts, items, or financial and non financial information specified, and that it does not extend to the entity's financial statements taken as a whole. Next, test your understanding too. During the course of performing a compilation engagement in accordance with SRS 4410, it becomes known to you that client has suffered a theft of loss of 100 lakhs of its inventories over a period of time at a storage location visited infrequently. A claim was lodged by the client with the insurance company, which was repudiated due to certain technical reasons relating to coverage of the policy. The client has not preferred a complaint or an appeal against said repudiation. The amount is reflected under the head current assets in the trial balance of the client. Discuss how you should proceed to deal with the matter. In the instant case, amount of 100 lakhs is reflected under the head current assets in trial balance. Since client's claim has been repudiated and no appeal has been preferred, it is a loss for the client and should be dealt accordingly. Therefore, amendments are required for the financial information not to be materially misstated. If the practitioner becomes aware during the course of the engagement that amendments to the compiled financial information are required for the financial information not to be materially misstated, or the compiled financial information is otherwise misleading, the practitioner shall propose the appropriate amendments to the management. If management declines or does not permit the practitioner to make the proposed amendments to be compiled financial information to the compiled financial information, the practitioner shall withdraw from the engagement and inform management and those charged with the governance of the reasons for withdrawing. If withdrawing from the engagement is not possible, the practitioner shall determine the professional and legal responsibilities applicable in the circumstances. Integrated case scenario. KM Limited has engaged your firm for compilation of financial statements in accordance with the requirements of SRS 4410. You also come to know that a company is setting up a new unit in Rourkela, Odisha. The company's management has provided you with a draft balance sheet and requires assistance in preparation and presentation of its financial statements for the year ended 31st March 2023. The management requires such a preparation and presentation for its internal use. During the course of engagement, it is noticed that there are apparent errors in few opening balances brought forward from previous year relating to some outstanding incentives receivable from government authorities. These have been swapped with some other balances in trial balance However, there are no credit transactions in such incentive accounts or accounts whose balances have been swapped during the year. One of the team members suggests that it is one of the duties to ensure that revenue figures stated in the trial balance at least are verified to ensure that all revenues required to be booked by the company have in fact been booked. It is also suggested by the team member that even though it is a compilation engagement, quality control aspects like adhering to appropriate standards need to be followed. Before signing and issuing a report under SRS 4410, you once again read the read the financial information. You come to your it comes to your notice that figures relating to setting up of a new unit of a company coming up in Rourkela in Odisha have not been properly disclosed in compiled financial statements. The expenditure was incurred from a bank account maintained in Rourkela and was omitted to be shown under appropriate heads. You are vacillating regarding above constrained scope of compilation engagement. The team has prepared detailed documentation during the course of engagement. Keeping in view above, answer the following questions. In respect of the errors in some of the opening balances noticed, as described in the case, which of the following statements I is most appropriate? Such errors should straightaway lead to qualification of a report to be issued. Such errors should be brought to the notice of the knowledge of the management. Knowledge of such type of errors has no effect on compilation compliance of ethical requirements by the firm. The above said matter relates to SF item, initial audit engagements, opening balances, and has no effect on reporting obligations in a compilation engagement. Correct answer is option B. Such errors should be brought to the knowledge of the management. As regards the suggestion of one of the team members regarding the verification of all revenues of the company, which of the following statements is most appropriate? Suggestion of team member is proper as such verification is part and parcel of such an engagement. Suggestion of team member is proper as the absence of such verification may make financial statements misleading. Suggestion of team member is not proper as verifying the accuracy or completeness of the information provided by the management is not required in such engagement. Suggestion of team member is not proper as compliance with qualitative requirements is not required in such engagement. Option C is correct. Suggestion of team member is not proper as verifying the accuracy or completeness of the information provided by the management is not required in such engagement. In view of the team member's suggestion regarding to relating to adherence to appropriate standards for quality control, which of the following statement is relevant in the context of above said engagement? First one, SA 220 is applicable in this engagement and has to be followed by the engagement partner meticulously. SQC1 is applicable in this engagement. SA220 and SQC1 are applicable in this engagement. SA220 and SQC1 are not applicable in this engagement. However, SRS 4410 lays down the detailed quality control requirements for such type of engagement. Option B is correct. That is SQC1 is applicable in this engagement. Next, fourth one, which of the following statement is most appropriate as regards omission of expenditure under appropriate heads pertaining to Rural Kerala unit in compiled financial statements? The above noted omission can be misleading. By disregarding such an omission, the fundamental principle of integrity is violated and engagement cannot be performed in accordance with the ethical requirements. The above noted omission can be misleading. By disregarding such an omission, the fundamental principle of objectivity is violated and engagement cannot be performed in accordance with the ethical requirements. The above noted omission has no effect on performing such compilation engagement. The above noted omission has no effect on performing and issuing reports under such compilation engagements. Option A is correct. The above noted omission can be misleading. By disregarding such an omission, the fundamental principle of integrity is violated and engagement cannot be performed in accordance with the ethical requirements. Next, the detailed documentation is maintained during the course of compilation engagement. Which of the following statement is most appropriate regarding the assembly of Final engagement file. First one, final engagement file should be assembled is not in not more than 60 days after the date of report. Second, final engagement file should be assembled is in not more than 120 days after the date of the report. Next, final engagement file should be assembled on a timely basis after the engagement report has been finalized in accordance with the time limit set by the firm. Next, there is no requirement of assembling of a final engagement file in a compilation engagement. Option C, final engagement file should be assembled on a timely basis after the engagement report has been finalized in accordance with the time limit set by the firm. Test your knowledge question number 1. List out few intended purposes of a compilation engagement. Compilation engagement is an engagement in which a practitioner applies accounting and financial reporting expertise to assist management in the preparation and presentation of the financial information of an entity in accordance with an applicable financial reporting framework and issues a report. Management may request a professional accountant in public practice to assist with the preparation and presentation of financial information of an entity. Financial information that is the subject of a compilation engagement may be required for various purposes, including to comply with the mandatory periodic financial reporting requirements established in law or regulation, if any, or for the purpose unrelated to mandatory financial reporting under relevant law or regulation, including, for example, for management or those charged with governance, prepared on the basis appropriate for their particular purposes, such as preparation of financial information for internal use, for periodic financial reporting undertaken for external parties under a contract or other form of agreement, such as financial information provided to a funding body to support provision or continuation of a grant for transactional purpose, for example, to support a transaction involving changes to the entity's ownership or financing structure, such as for a merger or acquisition. A compilation engagement is not an assurance engagement. A compilation engagement does not require the practitioner to verify the accuracy or completeness of the information provided by the management for the compilation or otherwise to gather evidences to express an audit opinion or a review conclusion on the preparation of financial information. Next, test your knowledge question number 2. A chartered accountant is offered appointment for a compilation engagement to be performed under SRS 4410. Is he required to comply with ethical requirements of Code of Ethics? Discuss briefly. Ethical requirements. The practitioner shall comply with relevant ethical requirements. In complying with the Code of Ethics, threats to practitioners' compliance with relevant ethical requirements are required to be identified and appropriately addressed. Being in nature of non-assurance engagements, independence requirements do not apply to compilation engagements. However, laws or regulations may specify requirements or disclosures, rules pertaining to independence. Next, test your knowledge question number 3. How do related services differ from assurance engagements? Chartered accountants in practice are often asked to provide services to clients which do not involve the expression of an opinion on the truth and fairness of the financial statements. For the purpose of standardizing the procedures to perform such kind of non-assurance services, the AASB of ICAI issued two standards on two different services, that is, standards on related services. The following standards have been issued under standards on related services: SRS 4400, SRS 4410. SRS 4400, engagements to perform agreed upon procedures regarding financial information. SRS 4410, compilation engagements. What are related services? Assurance engagement. Assurance engagement means an engagement in which a practitioner expresses a conclusion designed to enhance the degree of confidence of the intended users other than the responsible party about the outcome of the evaluation or measurement of a subject matter against criteria. It means that the practitioner gives an opinion about specific information due to which users of the information are able to make confident decisions, knowing well that chance of information becomes incorrect is diminished. Not all engagements performed by the practitioners are assurance engagements. Other frequently performed engagements that do not meet the definition of assurance engagements include preparation of tax returns, where no conclusions conveying assurance is expressed, consulting or advisory engagements, such as management and tax consulting, engagements covered by standards for related services, such as agreed upon procedures engagements and compilation of financial or other information. The above engagements are in the nature of related services. What are agreed upon procedures? In an engagement to perform agreed upon procedures, the auditor is engaged by the client to issue a report on factual findings based on specified procedures performed on specified subject matter of specified elements, accounts, items of a financial statements. For example, an engagement to perform agreed upon procedures may require the auditor to perform certain procedures concerning individual items of financial data, say accounts payable, accounts receivable, purchase from related parties, and sales and profits of a segment of an entity or a financial statement, say a balance sheet or even a complete set of financial statements. However, a person performing related services need not necessarily be the auditor of the entity's financial statements. Next, test your knowledge. Question number 4. Discuss main documentation requirements to be take care of by a practitioner while performing a compilation engagement under SRS 4410. Documentation. The practitioner shall include the engagement documentation. In the engagement documentation, significant matters arising during the compilation engagement and how those matters were addressed by the practitioner. A record of how the compiled financial information reconcile with the underlying records, documents, explanations, and other information provided by the management, and a copy of the final version of compiled financial information for which the management or those charged with governance as appropriate has acknowledged their responsibility and the practitioner's report. The practitioner may consider also including in the engagement documentation a copy of the entity's trial balance, summary of significant accounting records, or other information that the practitioner used to perform the compilation. Test your knowledge. Question number 5. CAP has been appointed to compile the financial information of X Limited. CAP is confused whether he should apply the same procedure which are required to be applied to conduct an audit, or there are some other procedures to discharge the duties under such an engagement. Define the characteristics of compilation engagement. What should be the approach of CAP for performing the engagements? Characteristics of compilation engagement. Compilation engagement is an engagement in which a practitioner applies accounting and financial reporting expertise to assist management in the preparation and presentation of financial information of an entity in accordance with the applicable financial reporting framework and issues a report. Management may request a professional accountant in public practice to assist with the preparation and presentation of financial information of an entity. Financial information that is the subject of a compilation engagement may be required for various purposes, including to comply with mandatory periodic financial reporting requirements established in law or regulation, if any, or for purposes unrelated to mandatory financial reporting under relevant law or regulation, include for example for management or those charged with governance, prepared on the basis appropriate for their particular purposes, such as preparation of financial information for internal use, for periodic financial reporting undertaken for external parties under a contract or other form of agreement, such as financial information provided to a funding body to support provision or continuation of a grant for transactional purposes. For example, to support a transaction involving changes to the entity's ownership or financing structure, such as for a merger or acquisition. A compilation engagement is not an assurance engagement. A compilation engagement does not require the practitioner to verify the accuracy or completeness of the information provided by the management for compilation or otherwise to gather evidence to express an audit opinion or to review a conclusion on the preparation of financial information. Performing the engagement. The practitioner shall obtain an understanding of the following matters sufficient to be able to perform the compilation engagement. The entity's business and operations, including the entity's accounting system and accounting records, and the applicable financial reporting framework, including its application in the entity's industry. The practitioner shall compile the financial information using the records, documents, explanations, and other information, including significant judgments provided by the management. The practitioner shall discuss with management or those charged with governance as appropriate those significant judgments for which the practitioner has provided assistance in the course of compiling the financial information. Prior to completion of the compilation engagement, the practitioner shall read the compiled financial information in light of the practitioner's understanding of the entity's business and operations and of the applicable financial reporting framework. If in the course of compilation engagement, the practitioner becomes aware that the records, documents, explanations, or other information, including significant judgments provided by the management for the compilation engagement are incomplete, inaccurate, or otherwise unsatisfactory, the practitioner shall bring that to the attention of management and request the additional or corrected information. If the practitioner is unable to complete the engagement because management has failed to provide records, documents, explanations, or other information, including significant judgments as requested, the practitioner shall withdraw from the engagement and inform management and those charged with governance of the reasons for withdrawing. If the practitioner becomes aware during the course of the engagement that the compiled financial information does not adequately refer to or describe the applicable financial reporting framework. Amendments to the compiled financial information are required for the financial information not to be materially misstated or the compiled financial information is otherwise misleading. The practitioner shall propose the appropriate amendments to management. If management declines or does not permit the practitioner to make the proposed amendments to the compiled financial information, the practitioner shall withdraw from the engagement and inform management and those charged with governance of the reasons for withdrawing. If withdrawal from the engagement is not possible, the practitioner shall determine the professional and legal responsibilities applicable in the circumstances. The practitioner shall obtain an acknowledgement from the management or those charged with governance as appropriate that they have taken responsibility for the final version of the compiled financial information